Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the dollar going and pare back some of these gains that they had. There's something we've been waiting for, but had not come to fruition. Maybe we're finally starting to see it come into play. We're actually coming into a little bit of support here for the dollar index right here at this 95.95. We'd mentioned this on the analysis. Let's get over here. Oh, there we are. Let's see. Yeah, initial minor support comes in at 95.95 with key support at 95.38. So we're right here into that support here at 95.95. We'll take a look at it here on a 2-hour. Right there. So right here into this support. Mark 95.9, right, happen to be right there at the moment, actually. So might see a little bit of a bounce across this area. Euros had another nice little run up here. There is some congestion right there. You see that 1438, a little bit of congestion. So we are seeing a bit of a pause. Looks like it made right up to tick off 1440. See here, we generated a buy signal right in here on the exponential moving averages. Buy signal came in, 1396. Finally started to push a little bit higher. And nice move that we got above here in the cable, but since we've kind of dipped back a bit here, now we're looking here on the 5-minute chart on the cable. And obviously a big move here on the dollar CAD. Right into some key support here. If you look on here, I think we had that marked off here on our analysis here, and we'll get to that. Let's take a look here. Yeah, daily closing support. That's daily closing support. Comes in at 33.56, and 33.26 is going to be the 38%. So let's take a look at that. We're looking right here on the daily closing support. You can see right there. So finding some support right there at that 33.56. We've been as low as, what was it, 33, so about 33.46 maybe. Yeah, about 33.46. Boy, look at crude. Nice call by Steve on the crude. If you saw that, he had closed out for a very nice profit. And boy, what a move we've seen back here in crude. It's allowed this dollar CAD to go on and push lower. And look at the gold. We did the analysis. We're still looking for this potentially to go and move back up a little bit higher, and that we have after the dip we saw on Friday. Our analysis had us moving into the zone here, which is this 1293, 1304. But I was thinking on Friday we could have actually gotten higher and ticked off 13, but obviously with that super strong jobs number, they paired back, but the weekly is still good here on the on gold. We pointed out here that you had a little bit of a formation here. It looked like almost like a little bit of a gravestone doji. But that being said, we still have the opportunity to push up a little bit hard depending on what the dollar does. So I think that opportunity is still there. Dollar yen was able to still push up a little bit higher here. Suddenly pairing back a bit here. And the Aussie dollar has continued to move up a little bit higher, although we're into a Tweed noted here, 61% here at 71.45, or 71.46 here. but we had one heck of a rally back. I think we're a little bit overstretched, but they're really putting the shorts, making the most out of them right now. Last week we were able to successfully defend this. Now we're looking at the daily chart on the cash dollar index on this 95.95. But as I mentioned, a bigger support is going to be 38, and we can potentially get to that. We were looking to want to be a fade of the dollar post NFP. I thought we might see a big move on Friday, but obviously with those big jobs numbers, that made it a little bit difficult for that to go on and play into it. And we're going to move into a little bit of news, and then we'll go right into the analysis. Before we get to that, though, we do have economic reports. We did get German retail sales. It came in rather steady here at 1.4, but we do have at the bottom of the hour the Eurozone Centex index, and they're really looking for a pretty big dip here. Last one was minus 0.3. Wow, they're looking at almost have to wonder if that's correct. Minus 2.8 here on the Eurozone Centex index. When we come into the States, so we are looking at ISM, non-manufacturing. They're expecting 59, a dip from that 60.70. That's supposed to come in at 10 a.m. Eastern. I know we got a pretty bad number the other day. And then we have Canadian IBPMI at 10 a.m. Eastern. Previously 64.30. But I apologize. Previously 57.30. So Canadian IBPMI at 10 a.m. Eastern. Later on the next day, we're going to have Australian unemployment report. So let's just catch the news up out here on the, speaking of which, the Aussie dollar. The Australian New Zealand dollars held near 2.5-week highs on Monday as risk assets came back in vogue. Amid expectations, policymakers around the world will take measures to support slowing economic growth. 3 developments on Friday gave the Antipodean currencies a leg up. First, Beijing announced a new round of trade talks with Washington. Then China aggressively eased monetary policy, slashing bank reserve requirements to prop up the country's economy. And investors got more cheer about when Fed Chair Jerome Powell said he would be patient and flexible on interest rate hikes. These proved a much-needed tonic for the global shares and sent the risk-sensitive Aussie dollar to 71.27. Actually, we're looking at it. Looks like we got up to 71.41, with 71.46 being the 61%, the highest since mid-December. The Aussie and Kiwi went into a tailspin last week as whispers of a possible recession in the United States grew louder, making some investors start pricing a cut in the Fed funds in 2019. Uncertainty stemming from a Sino-U.S. trade war also were a stone in the shoe for markets after disappointing manufacturing data readings in both countries. The worry sent the Aussie to near-decade lows of 67.15 Thursday morning in a wild ride that included a computer-driven flash crash. And like I said, we're up 400 pips, so we're a little bit stretched there. I do have an Aussie short that put on Friday. The currency shed all those losses the following day and finished last week about 1% higher, although analysts remain cautious. The Aussie short-term momentum might be to the upside, might be to the top side, but the risks that drove the local currency to 10-year lows remain. Stephen Dooley, currency strategist at Western Union, said, in particular, any further slowdown in U.S. or China manufacturing could pressure the AUD. The New Zealand held at 67.38, not far from Friday's 2.5-week top of 67.51. And on to the dollar. The dollar slips on Powell's views and optimism on trade talks aids the Aussie. The dollar slipped against the peers on Monday as traders placed bearish bets due to the rising expectations the Federal Reserve would put its policy tightening on pause in 2019. Risk appetites were strong in Asian trade thanks to China's aggressive monetary easing on Friday to address a sharp economic slowdown and hopes that Washington and Beijing can strike a comprehensive trade deal. The euro advanced 0.22% against the dollar, while the Aussie dollar, often considered a barometer of global risk, rose 0.2%. The news flow we've seen since Friday has lifted sentiment, said Michael McCarthy, chief market strategist at CMC. The market certainly liked what Jerome Powell said on Friday, and the reaction has been negative for the dollar. McCarthy also said China's cut in bank reserve requirements are very important, have lifted commodities. This should be supportive for the Aussie. On Friday, Powell told the American Economic Association that the Fed is not on a present path of interest rate hikes and that will be sensitive to the downside risk markets are pricing in. Despite Friday's stronger than expected U.S. jobs data, many analysts believe the world's largest economy is losing momentum and further rate hikes are the last thing it needs. Powell's comments that the central bank is prepared to shift the stance of policy boosted investor sentiment and sent U.S. stocks soaring on Friday. The dollar outperformed other currencies in 2018 due to the Fed being the only major central bank to hike rates. U.S. 10, 2, and 10-year yields fell sharply over the last couple of weeks, indicating that bond traders see little chance of the Fed raising rates this year and increase the likelihood of a growth slowdown in the world's largest economy. However, few analysts see the scope for the Fed to raise rates in 2019. Last Friday's strong jobs data suggested that recession fears were overblown, said Philip Wee. With the Fed looking to pause rate hikes, the market is likely to have gotten ahead of itself, pushing 2 and 10-year bond yields lower. After a slew of weaker than expected manufacturing data, Chinese authorities on Friday cut reserve requirements for all banks by 100 basis points. The move frees up $116 billion for new lending. The size of the cut was the upper end of the market expectations, and the net funds released by the largest amount in 5 reserve requirement reductions since January of 2018. Analysts expect further monetary stimulus from Beijing in 2019. Ray Trill, head of currency strategy at National Australian Bank, thinks it may be reasonable to expect as many as 400 basis point cuts this year. And we'll just quickly get on to gold and then get out of this thing. Eurozone bonds steady as worst fears about growth abate, having fallen sharply on concerns about the outlook for the world economy. Bond yields in Europe and the U.S. jumped on Friday after data showed stronger than expected U.S. jobs growth. From a short-term perspective, it's not all complete doom and gloom, but around 20 basis points, the Bund yield level suggests there's a lot of skepticism about the economic outlook, and we've had weaker data from Germany again today, said DZ Bank rate strategist Christian Link. Markets are trying to work out if this is a start of a recession. Markets' worst fears about the global economic outlook, which have led to aggressive repricing of rate outlooks, nevertheless appear to have subsided. And lastly, closing up on the gold, the dollar is weak, aiding gold. Also, Jerome Powell's views on Friday about the future of interest rates is a bullish factor for gold. Fed Chairman Jerome Powell said on Friday the risks related to economic slowdown would be patient and flexible. Given the state of sentiment and overall investment circles, it does appear the key factor there is a weaker U.S. dollar, said Michael McCarthy. A rally in Asian equities, triggered by the Fed's dovish stance and strong U.S. jobs data, limited the yellow model's upward momentum. President Trump said on Friday China's weakening economic growth puts the U.S. in a strong position for negotiations. And the world's largest gold exchange, GLD, rose 37 tenths to 798 and a quarter. So let's go on and move on to the buys chart. We're seeing the euro trying to make another move up a little bit higher. Actually, new highs here in the euro. And let's take a look at the analysis to start the week. So it says Friday's close provide no fodder for Eurobulls. 2-hour close above 1416 required to generate upside momentum. Well, we've done just that. Key daily close support remains 1342. The market remains in a holding pattern without a sense of direction. Well, we're starting to get that this morning as we moved higher, and we'll take a look at that 2-hour close. Well, we did get that 2-hour close above 1416, and you can see the importance here of 1416 here. There we go. So we continue to move higher. We actually generated a buy signal on the 30-minute that we refer to here on the exponential moving averages. So let's go and take a look where we set now. So we generated this buy signal, and we're actually pushing a little bit higher, even pushing up here to these newer highs. And let's take a look where we stand. Right now on a short-term basis, it's going to be right there, 1456. All right, here, 1456, coming right across here. You can see that. And just above these highs here. So go with 1456. I mean, obviously, if the market can push beyond that, but 1456 is where we're going to be looking for resistance this morning. Daily closing support still remains key here. With daily closing resistance at 1469. Let's go and take a look at where we stand here with the support. We'll just put the support just a hair below this key 1416. It's going to be right there, 1410. Actually, that's what we just dipped back for support right now. You see that? Look at that, 1410. That's going to be support there, 1410. Now let's go and move into the cable. Friday's close above 2017 quells the bears for now. A daily close above 2781 will spur a move to 2889. So a daily close above 2781 will spur a move to 2889 on the 2-hour. Support to start the week comes in at 2643 on the 2-hour. So let's go and take a look here. Like I said, Friday's close above 2716 quells the bears for now. A daily close above 2781 will spur a move to 2889 on the 2-hour. So let's take a look where we stand here on the daily. We're able to reclaim that 2786, and that was huge. Okay, well, you can see right here we're looking at here on the daily. Move into the 2-hour. So a little bit of additional short covering here on the cable. And there's that 2789 we're referring to right there, 2789. And we're going to go and use that for our resistance for the day. Obviously, we've got a key level right in here, coming in here right there, 2756, kind of keeping the market held for now. We'll go in and mark that off. There we go. But we're looking at for resistance today. It's going to be right there, 2789. Let's take a look for support. Right there, you can see that coming across. 2672 provides initial support. Seems a little bit close, and this is the real support coming in at 26.44. Tell you what, we'll go with that 26. There's probably going to be a little bit of support right here in a pullback, but this is the real support here, 26.44. Let's go and mark that off. Pretty good run we made up in here, right up here to 27.54. Actually came right into a nice little level here. Let's go and move into the dollar CAD now. I guess we'll just move right into the Aussie now. Aussie had a fabulous recovery, defending critical weekly support at 70.25. We pointed that out last week a couple of times. Initial resistance comes in at 71.46, the 61% of the entire move of 67.44 to 73.92. Confluencing with a 2-hour level at 71.42. Market is overstretched on a short-term basis as bears were run over on Friday. Support comes in at 70.43 on the 2-hour. So let's take a look at that Aussie. Boy, what a move we saw last week. We had talked about the importance of this 70.25 on the weekly, and we thought, before the flash crash that the market could possibly, all right. Let's move this. There we go. There we go. We thought the market could possibly close above 70 cents and then recover this week. Okay, and just mildly close above 70 cents. But boy, we saw that flash crash. But look at the comeback here in the Aussie to also support this critical key weekly level here at 70.27. Huge. But I think the market might be a little bit overdone. But we're looking at that, like I said, the news that came out of China, trying to spur things along. But we may be a bit overstretched here on a short-term basis. And let's take a look at here on the 2-hour chart. We did mention that 71.42 level here on the 2-hour chart. You can see that coming across here. Confluencing with the 61% of this entire move right here. So we're going to go with 71.46 as our resistance. Obviously still bearish. Support. This has been on it. This one things I like. Sometimes I don't pay attention to it, but I'll tell you what, enough, I should say. But, one of the things I like about this is on the exponential moving average. You see how we came back here and tested on both of the a little bit. I wouldn't say this one was a test, but right here on the slower exponential moving average and continues to remain in a buy mode. Although we are somewhat stretched here. On a very short-term basis, 71.10. Actually comes in right here. Let's go with 70.96. 70.96 for some short-term support. A little bit more also at 71.10, but we'll go with 70.96. Now let's go move into the Kiwi. Certainly a nice recovery also on the Kiwi. It actually, which has been the case, has fared better than the Aussie. Take a look here for initial resistance. $67.81 would be the 50%. There is some resistance right there. You see that at 67.64? Right there. We'll pull this in a little bit closer. It's actually where it stopped right there too. It's 67.63 and 2/10. Call it 67.64. And support comes in right there at 67.06 for today. And let's go and move into the dollar CAD. Okie dokie. Dollar CAD has posted a weekly reversal closing below the prior 2 weeks. Daily closing support comes in at 33.56. 33.26 is at 38% of this move from 27.82 to 36.42. And confluences with 2-hour support at 33.14. Resistance will be 34.51. And you can see we're getting a little bit of lift off of that 33.56 area. Looks like they went as low as 33.46, but here's where our daily close support is. Daily, we'll look at the daily here. You can see that right here. And the low so far was 33.46. We got that daily closing support here at 33.56. As I mentioned, if you look here, we took out the prior 2 weeks. See right here. So certainly having that bearish momentum continued. Seen a nice little rebound back here in crude oil. We saw that Steve had taken a nice profit on this run back up here. We're showing on the daily, but I'm sure it's a lot more dramatic move here on the 30-minute here in the crude oil. Boy, it looks like Steve caught the very tip of it here, coming all the way back. So very nice call on Steve's part. Let's go and come back to the dollar CAD. Obviously, the crude oil, a big influence on the dollar Canadian. Well, we have that key daily support at 33.56 we just mentioned, but you can see here we've got this 2-hour level here at 33.14, confluencing with 33.26 being the 38%. Support is going to be right there. 30, we'll call it 33 here. 33.52. 33.52. And when we look at resistance, we know the key resistance comes at 34.51, but on a short-term basis, $34.01. And let's go and move into the dollar Swissy. Some support right here at 98.02. See that coming across. Resistance is fairly clear here. Right there at 98.50. We'll just give it just a hair up there. Right there. You see that? 98.52. Certainly this has turned bearish. See, we generated that sell signal here on the 30-minute exponential moving averages and continue to probably press even lower than the 9802. Real support even comes, that 9802, should provide a little bit of support there. But you can see here the momentum has certainly changed here. Especially after this nice little gravestone doji. Wick might be a little bit high for the gravestone. And moving into the dollar yen. The dollar yen stages a strong recovery, but finished the week below key weekly support at 927. Rallies are to be sold. A weekly close above 927 would be required to negate the bear sentiment. Minor support comes in at 802 with key support at 752. And boy, what a healthy recovery this was. But you can see here, this is that key resistance we're talking about, 927. Any rallies back in here, you have to be sold. The only thing that's going to change that is if we would get a daily, not daily, but a weekly close above 925 would negate on a short-term basis this downside action. But for the most part, you'd want to go on and sell. Rallies into this market. And we just referenced here about short-term support coming in at 802. And that appears to be where they're finding support at. Right there at 802. A little bit below that at 799. Let's see. Let's take a look here on a 30-minute. See if we can see something a little bit closer. We'll go right there for support, 796, 796. Still a ways from the even the 23%, which I didn't come until 768, but we'll go with 796 for that short-term support. Some resistance here at 830, but that's not even that far away. So let's give it a little bit more room here. We'll go right there with 837. 837 for resistance, initial resistance. Still fairly close. And certainly on the 30-minute now, we continue to already have a sell signal on the exponential moving averages. Cash dollar continued to move a little bit lower. We're looking for this move to begin on Friday, if you remember. Been talking about that for the week and looking for this dollar to go on and turn lower. Well, that strong jobs report certainly stalled that out at the time. We'll go and take a look at it here on the analysis. The dollar index successfully defended the weekly support at 95.65. The dollar is below the 2-hour pivot. Remember, we talked about that on Thursday and Friday. The dollar is below the 2-hour pivot at 96.47, discussed as going into the NFP. The market would need 2 consecutive 2-hour closes above 96.56 to negate the bearish mode. Initial minor support comes at 95.95 with key support at 95.38. So last week we did a good job early in the week of defending this 95.65. Now we're starting to roll back down again. One of the things that we talked about on Thursday and Friday was the strategy of selling this market once we broke below the pivot. And actually, we did not expect it to break below the pivot until Friday after the jobs number. Well, lo and behold, remember, we saw this number break on Thursday. And despite some, we've had mixed data during the week, but despite the strong at the time ADP number, which did translate to a strong NFP number, we saw the market break below the pivot. It actually broke below the pivot on Thursday. And this is one of the strategies that we had going into the NFP was that we would look to sell this on a break of the pivot. I'm thinking that we would start to see this dollar come in. We made the case as to why the dollar would start to weaken. We talked about the interest rate differentials losing its momentum, the thought that the U.S. may go on and slow down, and also the poor performance of U.S. equities and probably go and see a move. There wouldn't be that demand that we saw before for U.S. equities. So let's see where we stand. So we mentioned about support coming in, initial minor support coming in at 95.95. There's that 95.95 I was referencing here. We're going to mark that off too. There we go. We're still pushing lower here. We're going to go with that key support. Now, I don't think we're going to get to it necessarily today, but you never know. Things start to turn around. But right here, we've got some support coming at 95.73. So it looks like they want to punch below. And the 95.95 wasn't that far from where they had closed on Friday. So it's not a bit of a surprise that they're getting beyond that. But real good support comes in right there at 95.73. Now, don't forget, we're not that far away from where was key weekly support here. I mean, that the market was able to really rally off of that. So once you get closer to that 73, we're really probably stretching it a little bit. That may coincide with the euro coming around that 1456-ish area, maybe even a little bit above that. So this is key on the weekly, but we have our support coming in at 73. We're actually going to go on and notate that here. Let's take a look on the upside. Here's that 2-hour pivot that we talked about. That's why we had it in red. And that was a strategy to sell it once we got below the pivot. Well, I thought we were going to get below that pivot on Friday. We actually broke below it on Thursday. So we wanted to be a sell of rallies on Friday. Resistance, if that's the case, and one of the things we talked about was about a big ship turnaround, and we talked about the moves that we had in the cash dollar index. And people had remained so bullish during this time, but that people were starting to lessen those positions and lessen them and lessen them more. So I thought we were at the precipice of really starting to be able to garner some downside momentum, not only from a technical standpoint, but you would actually have the volume to do it, as a lot of bulls have relented or given up, their positions, and it's opened the door now for this market where it can now start to slide lower. So with that being said, with that perspective, trying to go back to the pivot might be a difficult row to hoe. Although, on the intraday, they can make a quick move, but the real resistance is probably going to come in right there at 96.23. So any moves back to 96.23. So this dollar has continued to maintain its sell mode here. And we'll go and move into the gold market. So it says gold has paused in the 1293 to 1304 zone on Friday after a solid NFP report. Weekly remains positive, although a near gravestone doji has formed. Initial resistance is 1292 with support at 1275. If the dollar weakens, gold can still challenge at 1304. And essentially that's where we're at right now. Look at right there, right 1292, actually 1292 and a half here on the XAU. So moving back in here. Let's take a look at it on the weekly. This is one market was expecting it to continue to move higher. We were even surprised over the last 5 weeks or so why it had not moved higher in light of the volatility we've been seeing in equities. It will continue to move higher. So you can see here that the weekly remains positive. This is somewhat reminiscent, remember, not quite, but reminiscent of the dollar CAD when we saw that. Remember a month ago when we saw the payroll report, and then we saw a big reaction in the dollar CAD, but the weekly was still positive. Well, this is almost similar to the same situation. In a sense, the weekly remains positive here. Now, like I said, we form and I put it here as a near term or near gravestone doji. Not quite. The body's a little bit longer and the wick's a little bit high, but that being said, is the momentum still higher? Yes, absolutely. We're still higher. As long as we close above the prior week, hey, look, anybody that held it the week before from down here, they're still in the good, okay? So that you can't deny. Now, I have been a little bit of a stretch, yeah, but like I said, we had that solid non-farm payrolls. Now, that being said, if the dollar relents a little bit more, then I think, yeah, there's still that possibility of this 1304. And once again, you have a lot of people that are bullish or have been buying gold all along. So once again, if you have the positive weekly close, there's no reason for you may tighten up your stops, you may take a little bit off the table, but technically speaking, is there a reason for you to go short the market? No. So the market continue to move higher. It's the same thing that we saw in the dollar for so long. As long as it continue to move higher, doesn't take out the weekly, then it's still bulls still remain in control. And why we're looking for, once again, the resistance at 1293, but we said with the dollar, if it does slide further, we can still move above 1300. I thought there was a chance that we could move above 1300 on Friday with the momentum it had it not been for such a strong non-farm payrolls. That being said, we're not going lower, folks. We're still pushing right back up here to this 1293. So where do we stand? Well, there's that 1292/3 coming in right here. That's certainly going to be resistance. And it's holding up very well. So we'll stay with that zone of 1293 for now, but I think there's still the possibility we can break above 1300 because it has the momentum. All it needs is one little additional trigger and it'll jump past 1300. Once you get past 1300, I think then we can take a pause, but I think still the bulls still have control of this. And we haven't pulled back that much if you consider, the run that we've had so far here in gold. So it's going to be 1293. And for support, pretty clear right there. It's going to be right there, 1284. And you can see here on the 30-minute EMAs currently in the buy mode. Had a pretty good trigger right here on this sell mode. You can see here how well the EMAs have worked on this here. Let's go to the bonds. Resistance comes in right there, 47.18. And resistance here, support 46.23. Well, right now, this is almost working like a pivot here in the buns. So it's going to be, we've had that as resistance and support at the same time, 64.10. Well, not the exact same time, but it's changed from one to the other. Have it 64.9, we'll call it 64.10. Support comes in right there. That's a long ways away. That's just too far away. Hang on. Right there. 63.55 on the buns for support. And moving on to the DAX. Boy, we've had a heck of a rebound here. Just above that 38%. $869. Right now, things have turned bearish, probably with the Eurozone Syntex Index, which I didn't get a chance to take a look at. Falls to negative 1.5 in the Eurozone Syntex Index. Resistance, short-term basis is going to be right there. 812. 812. With support coming in. Looking at 670. Let's see if there's a confluence there. 631 would be the 38%. We're right now at the 23 right now. Let's just go with 670. We'll go with 670 on the DAX. So target for them to go to. And there's a bias chart for today. I'll get that posted in the room. And thanks for joining us here on the European Crossover webinar.